Good morning, guys. What's going on? It's your favorite mortgage lender, Abdel Kouami, with Tuesday Tips. What we're going to talk about today is in regards to what is going on in the real estate market. Just a quick update this week with some very factual statistics and some advice that I have for you guys. So how supply and demand impacts the real estate values is one of the topics that we're going to cover. And then most importantly, the topic in regards to supply and demand and the impact it's currently having in regards to the market. So I'm going to note a lot of different statistics today. As always, I do have my educational PowerPoint ready to go. If you guys are interested, simply message me directly. I'll be more than happy to provide it to you or one of your clients in lieu. Okay, so the impact of home prices. So currently, what does it mean when we're in a real estate industry, seller market versus buyer market? So a seller's market is whenever we have a shortage of supply of less than 6 months. So less than 6 months of a shortage of supply means we're in a seller's market. Anywhere between 6 to 7 months means that we're currently in a neutral market, which means prices will only appreciate when there's inflation. And then anytime we have home availability greater than 7 months or more, we're in a buyer's market. Currently, I did a video earlier this week where we actually have about a 2.7 to 3 month supply of homes, meaning we are definitely well within that spectrum of being in a seller's market. The month of July that just recently passed actually marked the 65th consecutive month where year over year prices actually appreciated and they rose to a median value of $258,300 nationwide. Okay, so buyer demand clearly at this moment is outpacing seller supply. Okay, so now what we're going to cover today, one of the major questions that a lot of real estate experts are currently asking today is whether prospective home prices still believe purchasing a home actually makes sense, okay, or whether it's renting. I did a video earlier in regards to renting. Let's not forget when you're purchasing a home and you're actually buying a home, your mortgage payment stays the same. If you have a fixed mortgage payment, whether it's 15, 20, or 30 year, your payment does not change whether the market is going up or down. As opposed to renting, we can definitely expect a very, very high uptick in regards to rentals, mainly because what's happened with COVID has allowed a lot of homeowners now the opportunity to increase a lot of rental depending on your contract. And they predict, actually, experts, where 14% of your rentals is actually going to expect to increase. Okay, so some actually claim that these rapidly home prices are being impacted by the demand. And with being impacted by the demand, and by extension, it's leading to a recent slowdown in sales activity. However, in reality, guys, demand isn't a real issue. Instead, it's the lack of supplies, the homes that are currently available for sale. Like I just stated, the statistic of about 2.7 months of a supply of homes is currently out there right now within the market. And then an article from the Wall Street Journal actually tells us that it's true in regards to new home construction. Home builders have actually sold more homes than they can ever build. And now they're actually limiting an effort in sales so they can actually catch up in building some of these homes. And there was actually an article by David Gold where he actually quotes, who's one of the largest home builders in the United States since 2002. He explains that there just really isn't enough homes for the number of buyers that are coming into getting a new home constructed. Throughout history, we generally usually have homeowners that walk into the model and tell them, we don't have a home to buy, we need to build one. That's actually something that's really uncommon, right? We're definitely seeing a very high uptick in regards to new constructions, and that's mainly because there's not many homes out there currently for sale. Now, I am going to predict that if there are changing inventories dynamics continuing, I'm slowly starting to see them, there's going to be a huge wave of real estate activity heading into the later part of the year, especially with the eviction moratorium slowly coming to an end. Let's see if it's going to be extended again by Joe Biden. I honestly highly doubt it, but let's kind of see the differences in regards to that. Now, again, going back to buyers, there are buyers out there. So it's a lot different than it was previously when we had the market crash, when there was a very high supply of homes and very low demand. In reality, now it's flipped the script, where there's actually a very high demand but a very low supply of homes. If the slowdown in sales was a result of a demand warning, then we'd actually see home prices slowly starting to moderate, if anything, reduce. And actually Mark Fleming, who's the chief economist for First American, states that there's a lot of conversations in regards to rising prices and the failing quantity in regards to home prices. But again, this is just a concept. It's just an idea. and there isn't a demand side problem. But in reality, if demand was actually falling dramatically, then we would definitely see a lower uptick in regards to price pressure and a lower home price growth. But we're actually seeing price appreciate and accelerate throughout the year over year. In January, it was just at 10% even. February was 10.4%. March was 11.3%. March is at 13%. And then you have a May appreciation increase in regards to 15.4%, with June about 17.2%. July and August appreciation numbers are not out yet, but you can statistically see actually month after month home values appreciating from 10 to 11 to 13 to the last numbers in June being at 17%. So what does that basically mean? Now, there's a shortage of listings. There's not a shortage of buyers. Again, I can't seem to stress the importance of that, but there's 3 very good reasons for those who are interested in purchasing a home. Some of the reasons why now would be one of the great times in order to get into it. So affordability is not the challenge, as most of us are claiming to be. The mortgage industry is black and white. You either qualify or you don't. Home prices have driven dramatically over the last 18 months, again, with COVID and some of those impacts that we've seen. But mortgage interest rates, guys, are still at historic lows. They're not as low as they were last year, but we're still seeing historic lows with 2s and mid-3s. Because of these near historic interest rates that are super low, monthly mortgage payments once again are very affordable. A difference in an interest rate of half a point on somebody's rate can make a huge difference in regards to qualification, even if you're paying $30,000 or $40,000 more than you would be paying for a different value of a home at a different time frame. Now again, while home values may actually seem that they're less affordable than they were last year, when we actually take into adjustment the concept of inflation, and we actually see that they're way more affordable than they were in the 70s, 80s, and 90s, and much of 2000s, when we actually saw that increase of uptake, where interest rates were close to 7, 8, even some instances 9%. The second things I want us to remember, and I've mentioned this numerous times before, is owning is better than a long-time decision than renting. A recent study actually showed that renting a home takes up a higher percentage of a household's income than owning one. And according to a statistic, here's the percentage in regards to income owned. Home buyers and renters should expect to pay now versus at the end of the year. So the percentage of income versus what they pay. An owner's percentage of income versus renting is actually at 19.4%, while a renter is almost at 30%. That's a huge difference. And then you have, by the end of the year, you're going to see also an increase where a homeowner's rental statistic is at 23% comparatively to their rental, while once again a rental is at 30%. One of the biggest difference, let's remember, is I mentioned this earlier, a person who has a mortgage, their payment does not change. It's fixed. It stays the same. As opposed to a renter, his payment will progressively go up every single year, and you have absolutely no control of it unless you're looking to exit the terms of your contract or your lease. While the principal and interest of your mortgage, again, remains the same, your rent, once again, is going to increase year after year. And I read an article previously where it can increase as high as 14% in regards to what it is this year to progressively next year. Homeowners also build their wealth over time, while renters build their landlord's wealth. I'm going to repeat that. Homeowners build their own wealth, while renters actually build their landlord's wealth. Remember, if you're a homeowner or an investor, one of the most successful millionaires out there got into it with real estate. Real estate helps you build wealth through growing equity over year. I can't tell you guys how many times I've gotten into recently requests for cash out refinances from some clients that I may have just done their mortgage. Honestly, less than a year ago or 2 years ago, I've had some clients in less than 2 years who put 5% down on a conventional loan, actually reached 20% of equity within just a couple months, if not a year, showing how much home prices appreciated. And that equity, they just got equity within their home, just literally the house sitting there with a few minor repairs done here and there, and their household is actually gaining benefit of this home value appreciation and accumulation. So one of the major financial advantages of home ownership, guys, is that it's the ability to build equity in the form of home price appreciation. We have taken into account the fact that the shelter that you're owning is equity generating, guys. You're building equity. That's, if there's one person, anytime I talk to a consumer and they're debating whether they should be renting or buying, the simple question is just, would you prefer to pay 100% interest rate a month by basically renting, or would you rather get a 3, 4, even as high as a 4% interest rate? You're still better off than paying 100%. That monthly payment you're making this month is going to appreciate whether you can pull out the cash now or reaching that 20% equity. You're still building that equity from now. So once a home price is purchased, this is from Odetta Kushi, who's the deputy chief economist of First American. He goes into saying, once a home is purchased, appreciation builds equity in the home and becomes a benefit rather than a cost. When accounting for the appreciation benefit in our rent versus own analysis, which I'll be more than happy to provide that to you guys, it was cheaper to own in every one of the top 50 states in the real estate market, including 2 of the most expensive rental markets, which is San Francisco and San Jose, California. So think about that, guys. Equity is substantial. It is crucial. The National Association of Realtors actually reports that the median sale price of single-family existing homes actually rose almost 100%, 99% of measured metro areas in the second quarter of 2021 that just passed compared to what it was a year ago, with double-digit price gains in 94% of the markets. That's crazy. So you're telling me that single-family homes existing rose almost 100% in sale price increases than what it was last year. And last year was not a slow market, guys. You know, as COVID was subsiding around this time frame, we were doing double-digit numbers with every single one of my loan officers, and we were crushing it. We've already surpassed our last year's volume, and the industry continues to appreciate thereafter. You know, in 94% of markets, there was greater than 10% increase in median prices, which basically means, let's break it down. If you bought a $400,000 home in one of those markets, your net worth actually increased by $40,000. That's crazy. So in 1 year, your home increased $40,000 and you literally did absolutely nothing. You just continuously made your mortgage payment. If you rented, guess who benefited? The landlord. The landlord got his mortgage paid by your rental payments and simultaneously was the recipient from your monthly mortgage payment that you're paying for him, and simultaneously that wealth of increase from appreciation. So again, guys, bottom line, for many homeowners out there, there's many reasons why the housing demand is extremely strong. What we need to do is more supply housing listings to meet that demand. I posted something earlier today in regards to some of the options for some first-time home buyers as to what are some of the recommendations that we can look into in regards to helping you benefit from purchasing a home. If you guys have any questions, as always, I will always shoot these Tuesday tips. Give my team and I a call. I will save this video and download it. Again, I have the PDF and the booklet. If you guys are interested in getting a copy for yourselves, or my realtors or professionals out there who you would like a copy of the PDF to your clients, please feel free to message me directly or comment on this video later on below. I'll be more than happy to share with you guys. Thanks for some of you guys for tuning in earlier this morning. I'll catch you guys next time. Have a blessed day.